Okay, good morning, everyone. Looking at the US stock markets, the Dow has earlier retraced from the 27,000 psychological level. Since then, it has pulled back towards the 24,000, near the 24,000 level, forming the double bottom formation. Yes, earlier we tested the 24,000 level, and once again, it has uh, pulled back towards the 24,000 and recovered from that point onwards. So for now, we are seeing the Dow continue to recover back above all the EMA levels and also above the 26,000 psychological level as well. For now, given the recent sharp gains from the 24,000 towards the 26,250 points, we could expect some of the mild consolidation to take place on the Dow Jones towards the 26,000 or even back towards the 25,500 points, closing the previous gap up formation before the next recovery to resume on the Dow Jones index. Similarly, on the S&P 500, we did see the S&P 500 has retraced from the 2940 towards the 2600. Since then, we are seeing a strong recovery on the S&P 500 as it closed above the 2800 psychological level on the last 2 days. And on yesterday, we are seeing some of the mild pullback activities on the S&P 500. So for now, we could expect some of the mild consolidation on the S&P 500 towards the 2800 or even towards the previous gap down formation, covering the previous gap near the 2750 before the next recovery to resume towards the 2900 or even back towards the previous all-time high at the 2940. The 2750 which is the previous gap up formation will serve as the immediate support level for now, followed by the 2700 psychological level on the S&P 500. The mixed sentiment on the US stock markets came in after the US Federal Reserve has kept its interest rate unchanged, and it has also signaled a hawkish tone on the future interest rate hike. So there's a high chance that the Fed could be raising its benchmark interest rate in the upcoming monetary policy meeting that is in the mid of December. Some updates on the crude prices. The crude prices has earlier tanked from the recent peak of 77 US dollars per barrel mark. Since then, we are seeing the violation below the 70. Before and after that, we are seeing the short recovery. The recovery did not last long as recovered for the next past 3 days. But after that, we are seeing a 9 consecutive days of selling pressure on the crude prices as it slide towards near the 60 US dollars per barrel mark. For now, the crude prices has already entered the bear market territory technical wise. After the sell-off from the 77 towards the 61, yes, close more than 20% lower. So for now, let's monitor to see how the crude prices react along the 60. That will be the immediate support level for now. If we can see some of the recovery pattern on top of the 60, then we might see some of the recovery, but gains will likely to be just short-lived towards the recent resistance, which is located towards the 63 or even towards the 64 US dollars per mark. In the meantime, should the 60 level fails to hold, then we might see further selling pressure towards the 55 or even towards the 50. The weakness on the crude prices came in amid the lingering concern over the rising US inventory and also supply level, coupled with the OPEC's production, which is at the all-time high. So there's a renewed supply on the renewed concern over the supply glut on the crude prices right now. Okay, some updates on our local front. The FMKLCI has earlier recovered from the 1670 level. Since then, we are seeing the key index rising back above the EMA 9 and also closing back above the 1700 levels, and the key index consequently maintained above the 1700. Despite the gap up formation yesterday on the FMKLCI, we are seeing the quick profit taking activities on the key index as the FMKLCI gave up some of its intraday gains, forming the black or the bearish candle. So for now, we could expect some of the further profit-taking activities on the FMKLCI as the key index might drift lower back towards the 1700 psychological level to sell it holds there. If you can see some of the bullish candle or the recovery sign, like a hammer or bullish candle, then we could expect the recovery rate to continue towards the 1740 level on the FBM KLCI. On the lower liners wise, we are seeing some of the similar pattern. The lower liners has seen a good recovery pattern since the 30th of October. Since then, we are seeing the FLS market index has staged a strong recovery back above the EMA 9 and subsequently rising above the EMA 20 level yesterday as well. Despite that, we are seeing some of the dodgy candle was being formed yesterday, signaling the uncertainty over the near-term period. So for now, we could expect the advanced market index to see some of the profit-taking activities to drift just marginally lower near towards the EMA 9 to sell it holds there. If we can see some of the recovery pattern from that point onwards, then we might see some of the further recovery back towards the 13,600 points. On stocks wise, we can watch out for firstly will be Chinwell. Chinwell has earlier staged a very strong rally towards the recent peak of around the 2 ringgit psychological level. Since then, we are seeing a healthy pullback on Chinwell as it pulled back just towards the near the EMA 120, which is around the 1 ringgit and 63 cents. And during this pullback phase, we are seeing not much of the heavy selling pressure throughout this period of time compared to the previous round of our rally towards the 2 ringgit. We did see a lot of huge volume was being traded or accumulated or being pushed up during that period of time. Subsequently, it staged a pullback without significant volumes, implying that the buyers are still in position on the company. And recently, we are seeing a good recovery pattern from the EMA on 120 level as well as price recovered, and the uptrend inter-orientation formation was recently re-established. The EMA 9, 20, 16, and 120 has been in line. So for Chinwell, for now, let's monitor to see if there's any breakout above the 1.84 ringgit. It attempts to breach above the 184 yesterday. It managed to breach on intraday basis, but it did not close above that. So let's monitor for the 1.84 ringgit level. Should the 184 level were to be breached, further upside will be seen towards the 2 ringgit or even towards the 2 ringgit and 10 cents level. Your stop loss point will be located towards the recent low of 1 ringgit and 75 cents level on Chinwell. And the good thing on Chinwell also is that yesterday the government has mentioned that they are imposing provisional anti-dumping duties ranging between negative 3.3% towards 16.2% on imports on galvanized iron from China and also Vietnam. So this could boost the margins on Chinwell over the near-term period. On KGB, price has earlier staged a very strong rally similar to Chinwell towards the 1 ringgit and 28 cents level. Subsequently, price has staged a healthy pullback just towards the EMA 60, forming the breakout, pullback, and the continuation pattern as price has formed the trend line breakout yesterday above the 1 ringgit and 17 cents level, accompanied by some of the improvement in volumes being traded. With the breakout above the 117, we could expect price to head back towards the 128 or even towards a new high at the 1 ringgit and 35 cents level. Your stop loss point will be located towards the recent low, which is currently located at the 1 ringgit and 11 cents. On indicators wise, we are expecting the MACD indicator to issue a buy signal over the near term, whereas the RSI has risen above the 50 level yesterday. On our Rich Energy, despite the core prices has already entered into the bear market, we are still seeing some positivity on the Rich Energy. Rich Energy has again rallied towards the 52 cents level, subsequently price pullback just towards the EMA 60 level and recovered from that point onwards. And on yesterday, we are seeing a good consolidation breakout above the 41 cents level on Rich Energy, accompanied by some of the improvement in volumes, signaling a potential breakout, pullback, and the continuation pattern for Rich Energy to trend firstly towards the 43.5 cents or even towards the 46 cents level. Your stop loss point will be located below the 37 cents on Rich Energy. We are still recommending on Rich Energy despite the weakness on the crude prices. It's mainly because on 5th of November, Rich Energy has came out with an article saying that they are diversifying into the downstream oil and gas segment. So they are going for the refinery. They are moving into the refinery segment instead of solely relying on exploration and production. On MGB price, as we did mention on this counter earlier on, that we're going to monitor for the record above the 76.5 cents level on the 5th of November. On Wednesday, we did mention on this company that we're seeing a bullish divergence signal on the MACD and price action, that we're going to monitor above the 76.5 cents level. Despite the sideways shooting star candle, we are seeing this as accumulation was taking place. MGB subsequently did reach above the 76.5 cents level yesterday. So for now, you can continue to hold on to your if you're into this company already, you can continue to hold on to your position towards the 84.5 cents or even towards the 90.5 cents level. Your stop loss point can be trailed towards the daily EMA 9, which is currently located at the 74.5 cents level on MGB. On Salutica, price has formed the double top formation along the 65.5 cents level after price continues to reject the EMA 20 level. So price subsequently hit towards the 47.5 cents level and forms out the mild recovery pattern. We are seeing Salutica has experienced a short-term consolidation record above the 52.5 cents level. Given that price is still on a downtrend formation, the EMA 9 still below the 20, below 60, and below the 120. We are seeing a potential recovery pattern with just a technical rebound. Gains will be likely to be capped towards the 59 cents. That will be the immediate target price for now, followed by the 61 cents level. Your stop loss point will be located towards the 50.5 cents level on Salutica. With price forming the bullish candle yesterday as price breached above the 52.5 cents, we are seeing the MACD indicator has issued a buy signal, whereas the RSI has recovered from the oversold position. Last company for today will be Redmans. Redmans International has been traded lower towards the 20 cents level since its IPO days. Since then, we are seeing a strong recovery pattern on Redmans towards the recent high, hitting an intraday high of 40.5 cents. After touching the 40.5 cents level, we are seeing Redmans has subsequently pulled back just towards the EMA 120 and trade on a sideways manner. So for Redmans right now, we are seeing a short-term consolidation breakout above the 35 cents level, accompanied by some of the improvement in volumes yesterday, that we are expecting price to trend towards the immediate target price will be located towards the 37.5 cents, followed by the 40.5 cents level. Your stop loss point will be located below the recent low of 33 cents. If you can take further risk, the final defense will be located towards the 31.5 cents level on Redmans. If you have any questions, you can put in the chat box and I'll reply you shortly. For Maju, earlier we did mention for this company that we're going to monitor for the breakout above the 27 cents level. Earlier on 4th of October, we thought that price could likely to breach above the 27 cents, but price did not breach above that, and subsequently price traded just on a sideways manner over the past 1 month before we did see a very strong rally as price hit our first target price at the 29 cents and also the 32.5 cents level. Given that price has really breached these two levels, and on yesterday itself, we are seeing some of the climatic volumes being traded. We could expect some of the mild pullback activities to kick in coming days back towards the EMA 9, which is currently located at the 29 cents before the next recovery to resume. So let's monitor to see how price pull back and holds above the EMA 9 level for now. If you're holding on to this counter, it's advisable to take some of a profit. Maybe you can like take half of a profit and let the other half run. If you look at the 30 minutes chart or the short-term minutes chart, we are seeing the good uptrend interpretation formation being established, but we throughout this period of time until here, we are seeing price has formed a bearish candle. Yes, we tested the pullback towards the EMA 20, and during this period of time, we are seeing the overbought position over the past couple of days, and also we are seeing the MACD indicator has really a sell signal on the 30 minutes chart. So there's a high chance that price might likely to pull back over the near-term period. So if you want to enter on this company, the risk is really quite high right now. So it's best to monitor for the pullback first until the risk is quite low. Then only we can take action on Pamaju. On Charimin, price has again rallied towards the recent peak of around the 35.5 cents level. Price subsequently pulled back towards the 22 cents and recovered from that point onwards. Price has also experienced the short-term breakout above the 26 cents level, accompanied by some of the improvement in volumes. But given the recent weakness on the crude prices, we could expect some of the mild pullback activities on Charimin before the next recovery to resume. So for Charimin right now, we could expect some of the mild pullback towards the 24.5 cents level. If price managed to recover from that point onwards, then we could see further upside for Charimin back towards the 29.5 cents or even towards the 31.5 cents level. Revenue has earlier rallied towards the recent peak of around the 1 ringgit and 30 cents a level. After touching the intraday high of 1 ringgit and 30 cents, price subsequently pulled back just towards the recent low of the 90.5 cents. Subsequently, price has made a good recovery, and on yesterday, we are seeing the gap up formation on revenue as price has formed a very strong bullish candle. So given the bullish candle yesterday, we could expect some of the further upside on the revenue to trend back towards the 130. Should the 130 level were to be breached, further upside will be seen towards the 140 or even towards the 150. So every 10 cents will serve as the next resistance level on a revenue upon the breakout of 130. Your stop loss point will be located towards the recent gap formation, which is located towards the 1 ringgit and 11 cents or 1 ringgit and 12 cents level on revenue. The revenue has gap up yesterday and subsequently trended sharply higher. Came in the price price and the volume action came in after the company has announced that they are partnering with public bank to roll out their e-payment system. If there's no further question for today, then we'll end the morning briefing. Thank you.